please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Let's see. Let's get an expert to parse the borrowing numbers to us. The big story of this morning, the surprise bonanza for the money markets, lower borrowing in the first half of FY19. Manish Wadhawan, Managing Director and Head of Fixed Income at HSBC India, joins us. Good morning, Manish. Thank you very much for taking our call. What do you expect the bonds might do today?
Morning, Lata. It's been a real positive development in terms of the announcement which was made yesterday. And, the biggest surprise has been, first of all, the reduction in terms of what they're going to be borrowing. Last year's number, first half was 3,72,000 crores and its first half is 2,88. On top of that, the bigger thing is that 10% of this number would be borrowed through the inflation index bonds and the FRBs. And finally, they have, the government has heeded to the demand from the banking community that for the last 6 months, duration has been very high in the system and market is not able to absorb. They have also readjusted in terms of the tenors which they have, which they'll be issuing. So if you look at it, a reduction of the tenor, which is the prime tenor of 10-year, has been reduced by nearly 50%. And introducing the short-end tenor also in the borrowing program adds to all kind of positivity. So net, I would say to conclude this part that we expect definitely yields to be down 10 to 15 basis points. How will it finally pan out? I think it will depend on post-policy. But today, yes, the reaction could be around approximately 15 basis points. It could go a bit higher or a bit lower, but that adjustment should happen today.
Okay, let us assume that 1 rupee 50 paise is what the bond prices rise by. Then what is the gain for the bank book? I mean, what is the AFS book for the banking system generally? I think banks have 40% of the total Government of India securities. What might be the excess that can benefit from this? Just a number for the industry.
So, Lata, I think the context would be that last quarter, the AFS losses were around between 15 and 20,000 crores. If theoretically the rally happens around 15 basis points today, there's a combination of factors which will come into play. One is the 10-year benchmark, which is a barometer for pricing in state government loans and a lot of other bonds. And the other is the price of securities itself. The only guess at this moment I can make it is that these losses would be less than half of what they were in the last quarter.
Okay. So again,
at around 745, 7.5 levels on 10 years.
Okay. So some 10,000 crore of gain, you would say?
No, I said the losses.
I mean lower losses. That's what. Yeah.
Lower losses. So I think it should be even. It could be even lower. Because the valuation is not only the 10-year benchmark. It is the securities are priced at their own prices. So all the securities are marked at the market prices. 10-year benchmark is important to mark to market the portfolio, which is very large, which is the state government bonds.
Okay. Well, what would your guess be in April? Do you think we go towards 7 quarter? That's what some people were saying yesterday.
Lata, it's difficult to hazard a guess. I would again reiterate, we will have to wait and watch what the policy stance is. I'm not denying that this is a very, very positive move. So the supply, has been curtailed quite sharply in terms of long end supply, in terms of duration, and in terms of the overall quantity also. From here on, I think, as I said, policy is important. Second thing would be how do the international markets behave? And if you look at oil, if it is trading at above 70, all these things are going to play.
Sure.
From a borrowing point of view, I don't deny this fact. It's a positive development. But giving a number of 7 quarter or 7 or 735, I really don't have an answer to this.
Okay, Manish, yeah, sure. Yeah. Thank you. We'll leave it at that. Thank you for joining us and giving us your thoughts. So bond yields could fall 10 to 15 basis points today. And the losses that banks see because of the bond portfolio, that could reduce by half because of this positive news flow.